have to keep her out.
She is. I think she just rejoined.
Hi
And
guys, I am here. I stepped away from the computer for 1 second, but I will
Okay,
be right back in my chair.
We're just Summer's going to make sure you can present, because when you jump
great.
out.
Okay, hold on 1 second.
you should be a presenter again now, Melissa.
Okay, all right.
All right. Chris Dautel, welcome. Haven't seen you in a bit. Logan Vaughn, I walked right by you on the sidewalk yesterday. You didn't even look at me.
My bad, Dan.
Hey, Dan.
Hold
I have my head
out.
up more often.
Was it something you said?
All right.
We all try to ignore him when we see him on the streets.
Yeah. All right, Melissa, you are good to go. You can unshare.
Okay, thank you guys.
A couple minutes after. So Sarah Kearns, welcome. Always good to see you. David Morrissey, the other new friend from Hula, welcome. Nice to have you. Megan Zimmerman, hello. Michael Metz, nice to see you yesterday, my old friend. All right, we are going to get started. Summer, are you still here, or did you take off?
Yes, I'm here.
All right, listen, everyone. Summer put this awesome program together. She has to run to class, but I'm going to let her just tee it off real quick, and then I will introduce Jan St. Auge, and we'll get going. So, Summer, how'd you think of this? What'd you have in mind today?
So we're really excited today to share a couple of different investment funds from across the state. Some new, some old, and some that have just launched a second cycle. So I'm excited to hear from folks. And last year we did this investor network that was focused on impact funds, and these funds are all sort of different aspects of investors that invest in the state of Vermont. So yeah, really excited to hear from them, and I will let Janice kick it off for us from the Flexible Capital Fund.
Great, thanks so much. All right, let me get my screen back up. All right, can everybody see?
Yes.
Yeah, you're good to go.
All right, I was trying to figure out if I could get the full screen, but I might not be able to because I'm not technology astute here. Thanks so much for giving me the opportunity. I'm Janice St. Auge, president of the Flexible Capital Fund. We are an impact fund and what's also known as a Community Development Financial Institution, or a CDFI, whose mission is creating healthy food systems, preserving working lands, building resilient communities, and addressing climate change. We do this by investing in companies that are providing regenerative solutions and equitable workplaces. So we've been around for 14 years, hard to believe because I have a little bit of gray hair going on here. But we just did our second, we had our first close of our second fund. And so we're off and running again for another decade. We are women-led and managed, mission-driven with financial returns, and we are one of the few CDFIs in New England that's using an alternative investment structure called revenue-based financing, which I'm going to talk a little bit about. So this is just a few of our portfolio companies from the past 14 years. Some of these companies you might recognize, all really companies that achieve our mission of healthy food systems and mitigating climate change. Just thought I'd give a little bit of background about what we think our value proposition is, both for investors and for companies. So again, we've been doing this for 14 years, one of the few impact funds in New England using revenue-based financing as an alternative to equity investment. We've been able to leverage CDFI dollars, which is through the U.S. Treasury, to reduce our investor risk. We have ongoing cash flow from self-liquidating investments. So unlike a venture fund, which has to wait for an exit of a company or a sale of a company, we get monthly revenue share payments from our businesses. We are investing in more sustainable companies as opposed to high growth, high margin businesses, leading to what we think are more durable returns and impact. And for investors, we spread the risk across a portfolio of companies. For the companies that we invest in, oftentimes these are companies that can't get equity investment or don't want to give up ownership. or are having challenges getting traditional debt because they don't have collateral or operating history. So we can be that non-extractive alternative to equity capital. We provide longer payback times than traditional debt might provide. We also have a business coaching program and access to our networks and resources. And again, for those companies who are looking at growing their business, but aren't ready to give up ownership or don't think they ever will be ready to give up ownership in their business, we're non-dilutive. And we don't take a seat on the board. And so we are not involved in decision making. So this is the infamous capital continuum, just giving you a sense of where we fit on the continuum from low risk, low reward banks, which is traditional debt that look for security via collateral. They want a personal guarantee, second mortgage in the home to secure that guarantee, and your firstborn child. So basically their cost of capital is going to be lower, all the way up to venture capital and equity investment, which is higher risk, but higher reward. They're looking for 3, 5, 10 times their money. We're smack in the middle in terms of risk and reward. So oftentimes, especially in this environment, I would say, these are some of the reasons why businesses will come to us. It's hard to raise working capital. And with traditional debt, oftentimes lenders want collateral, and early stage and growth stage businesses don't have collateral. They might be perceived as too risky or have not enough operating history, or a lender doesn't really understand the industry that they're in. On the equity side, it's hard to raise equity because maybe you're a company that doesn't have a high enough growth rate. You don't have a clear exit plan. You don't want to give up decision making. Your market might not be large enough, or you just need more time to improve the valuation of the business. So this is where we think revenue-based financing can be a good fit. It's debt, but it acts like equity. We don't take a percentage of ownership, we take a percentage of revenue over time. So we're looking at the future growth of the business. It's structured over a fixed period of time or time period, or until we reach a set return. So we can look at a multiple on our money and say, okay, once you hit 2 times our money, you're done and you can move on. And hopefully that capital has helped you grow. It's less expensive than equity, but it is not low cost capital. So let's be clear about that. We aren't forcing an exit because you're paying us a revenue share payment until you get to the multiple. And it's one more option on the continuum. We need all of that kind of capital that we talked about. And why is our RBF a good fit? Well, it's for companies that might be turned down by banks for things like hiccup in their sales or profitability. They don't have enough collateral, concentration of sales or market interruption, or they don't really have anything behind their personal guarantee. Or when they don't want or can't get equity because they don't have a clear exit plan, they don't want to dilute ownership, their market growth might not be large enough, and they want to preserve freedom and control, or their existing capital structure just isn't going to support equity. So here's just a quick example of a company that we worked with starting in 2016, Core Power, which is formerly known as Northern Reliability. It was a renewable energy battery storage company based in Waterbury, but they were experiencing growing pains and they had lumpy revenues. They needed working capital to grow and really seize on the market opportunity because they had a pipeline. They had a strong sales pipeline. So their challenge was they couldn't get bank debt because they didn't have enough operating history or collateral. And it was going to be challenging to raise additional equity because they had a very low valuation. So they came to us. We did a $450,000 revenue share or revenue-based financing note that functioned like equity, but it didn't dilute their ownership. They paid us 2.4% of their gross monthly revenues over time and got to 1.9 times our investment in 7 years. They were fully paid off on that note in 2021. And so in this case, our multiple was lower than an angel or venture capital, but our capital did function where if they didn't have revenue, they didn't have a payment due and they weren't in default of their note. So what's the results? NRI, fast forward, merged with Core Power in 2022. They remain in Vermont with good paying jobs. They grew from 25 employees back to, I think they're upwards of 100 or 100 plus employees now, still in Waterbury. They continue to innovate. They have throw up a new company called Nomad Transportable Systems. And we actually had warrants in addition to that RBF note. So we retain equity in both Core and Nomad. So I'm going to wrap up with this. The RBF benefits, it fuels more sustainable companies, leading to what we think are more durable returns and impacts. It's adaptable to economic cycles. So think about pandemic. When that happened, we had a number of food companies in our portfolio selling to restaurants. They didn't have revenue. They didn't owe a payment and they weren't in default of their note. It's aligned with the incentives of the borrower and the investor. It's self-liquidating, so we don't require a strategy. Yes, it's lower returns than equity investment, but it's going to be higher returns for our investors than traditional debt. Traditional equity, it is an important source of capital for high growth companies on a really fast trajectory, but it does require continued growth that may not always be sustainable for some of the companies that we see in rural communities in New England. It's illiquid and it does require an exit strategy. It dilutes ownership and possible decision making. So oftentimes equity investors will ask for a seat on the board. And it is less available to sustainable impact businesses that are growing on a slower trajectory. So with that, this is how you can find us. We're on the web at flexiblecapitalfund.com, and you can reach me at janice@flexiblecapital.com. So thanks so much for the opportunity.
Thank you for reaching out. And Jan, if you want to put your contact information in the chat, people can always come back and find it. Very good. Thank you very much. All right, we are going to move on. My old friend Jeff Robertson from the VCET Vermont Seed Capital Fund. Jeff, take it away. Go ahead and share your screen. And
is that working?
Not yet.
There we go.
There you go. Well, we're seeing your calendar.
That's so fun.
You're a busy guy. There you go.
All right. All right. Well, thanks, Janice. Great. And thank you, Dan and Summer. Jeff Robertson, Vermont Center for Emerging Technologies, otherwise known as VCET. We're going to talk about our investment program today, but we're a 501c3 nonprofit, economic development focused organization that will work with any entrepreneur in this state. And we've got, in addition to the investment funds, we've got a co-working space in Burlington, and we've got what we call a platform. We do a ton of advising. Any company in Vermont we can advise. We work with a lot of students, researchers at UVM, people from Middlebury. So we sort of go across the entire entrepreneurial continuum, to steal Janice's word. But today we're going to focus on the investment side of things. So we've got two funds at VCET. Fund 1 launched in 2010. It's the Vermont Seed Capital Fund. It was about a $6 million evergreen fund. Now, evergreen fund basically means that we put the money out, and when somebody sells or has a liquidity event, we get the money back. We can recycle that and put it back out into the community, into more companies. We're in this fund, we're looking at pre-seed and seed stage companies. So these are very early stage companies. So sort of finding product market fit, if you will. Check size, as you can see, 75,000 to about 150 in this fund. There's 36 companies in this fund, and Core Power or Northern Reliability is one of them as well, much like Janice's example. And the idea of this fund, this is to get people going, to take a risk. Sometimes we go in on companies alone and nobody else will come in. So the Seed Capital Fund will jump in and try to jumpstart the company's trajectory. We'll go in with other funds in Vermont. As I mentioned, Janice was in Northern Reliability, Core Power, and all the other organizations. Sometimes we invest with them, sometimes we don't. And that's the Fund 1, just general overview. Fund 2 is a newer fund. We got this one in 2024. It's a $9 million fund. We've got 10 companies in that fund. It's also an evergreen fund. This one, we focus a little bit later stage, so we'll go into seed as well, but then we'll even go up into Series A and later stages if it makes sense. The check sizes are larger for the growth fund, about 300 to 700,000. We're averaging 500,000 about at this point. And again, this is getting into companies where they've got a little bit of traction, things are moving ahead, have some revenue, and a little bit de-risked as compared to the seed capital fund investments. Both of these funds, again, are focused squarely on creating jobs, creating economic activity, and helping the Vermont entrepreneurial ecosystem and companies within that ecosystem thrive. We're industry agnostic, so we'll go into any industry. We're Vermont Center for Emerging Technology, so generally speaking, most of the companies we invest in are technology, or tech companies or tech-related companies. That said, we have done investments in non-tech related companies. We've done the investment from the Seed Capital Fund in Lost Lantern Whiskey, for instance, to help them, get over the line and get there and get that round in particular close and move forward. So, we're the things we won't do. We won't do real estate, and we don't do
Restaurants.
sort of, restaurants, bricks and mortar, Main Street type businesses. There's other funds that are better for that and sources of capital. We're really focused on sort of venture style growth trajectories for companies to try to add value. What we do is we don't just invest money and walk away. We are with the companies till they're bought or buried, we say. So, we want to work with these companies for a long time. We leverage our networks. We try to give them unfair advantages. We try to help our companies that we're involved with succeed in many different ways. We help them find employees. We help them find board members, advisory board members, even customers. So, we're really out there focusing on these companies, what's best for them. We're engaging with them often. We talk to our companies on a regular basis, most of them. We don't normally take board seats. We do sometimes. So, I'm on the board today of 2 companies and an observer on another. And that was really because we were invited. It wasn't a requirement of our investment, because people find value in the services that we provide in addition to simply the capital. What we look for in an investment. So we start out with an undeniable team. We're looking for people who have experience in the market. They've got a specific market insight, and in an inevitable market. So that's a market that's just rising. All boats. The tide is rising. All boats are rising. So trying to find places where, all right, this market is gonna grow. Think baby boomers. Think healthcare. Med tech. Things of those areas. Implantable devices, where this is going to grow no matter what anybody does. We've got the 4 T's. We look at the team. Why you? These undeniable people with specific market insight. That's key. We want to see just simply amazing go-getters that are out there hustling and getting after it. Tech. Why this product or solution? What's novel about the technology? Why is this different? What is it about this product that makes this company have a great potential for success? We want to like the team a lot. We want to love the product or the technology. The next one, timing. Why now? Market dynamics. This goes back to the inevitable market. So what's happening now? Is it regulatory? Is it demographic shifts? What's happening out there in these markets that are making them all rise? And then the final T in the 4 T's is what benefits. So benefits are multiple things. What are the terms under this investment? Are we getting terms that are beneficial to the state of Vermont effectively? Are we creating jobs? Are we helping areas that maybe aren't overloaded with companies? Chittenden County. So we have things that we're looking for that check boxes for us that we feel fill our mission as a 501c3. So we're unique, generally speaking, in this space, in that we are a 501c3. We have a co-working space. We have this platform in the advising and the services that we offer. And so we're not just a capital provider. Many companies that we work with, we advise first. The old saying goes, come in, ask for money, you'll get advice. Come in and ask for advice, you'll get some money. So, we're really a long-term partner with these companies, and again, leveraging our networks, going in, I mentioned the boards and observation and connecting with the companies and the founders on a very regular basis. We do that so that we can add value. Because if we find out about something after the fact, we can't help them, solve that problem. So many of our companies, I would say most of our companies, find us a really valuable resource outside the capital. Here are some of our companies. A bunch of our companies. You can see Core Power up in the left-hand corner there. So you can see, some of these you've probably heard of. Some of these you haven't. Rigorous Technology right in the middle. Robotics company, software. They make software for robotics, and they sell full systems, or they can just sell software. We've got OMD is in the medical communicating with your doctor via text and otherwise. Helping people streamline their medical communication issues. Verde Technologies, another sort of, it's in the clean tech space. That's thin film perovskite solar panels. That's a great example of a company where VCET was the first company to make an investment, and the next investment didn't come in for another, I think it 3 months, and then the follow after that it was another 3 months. So we went in, we led the round, got some momentum. We were out there alone for a while, and helped get other people in and helped close that round.
And Jeff, if I may, Verde is a success story spin out of UVM.
Yeah.
And really pleased to see how VCET stepped right in at the initial urgent stage to help them get to the next level. So thank you.
Yeah, and Verde, thanks for pointing that out, Dan. We've got a very close partnership with UVM. We're a UVM affiliate, and so we do a lot of work with UVM. But Verde in particular. So recently, as an example, they just did a round, and actually the round was pretty well filled out. So we didn't participate in the round, but the lead investors asked me to be on the Verde board, even though we didn't participate in that round, because they value VCET's ability to help move companies forward. And I've got an experience in the energy space, from my previous lives. So that's an example of adding value, being asked to be put on a board and help the company. So, we've got companies in all kinds of different. Does anybody have a question? No, okay. And there's some photos. You can see Nomad Transportable Power came out of Core Power. That those are batteries that are on a truck, as you can see. And so we're across lots of different areas. As I said, we're a nonprofit 501c3. So these are our supporters and our partners. The Vermont Technology Council, UVM, of course, Senator Leahy, of course, helped out. State of Vermont, Middlebury, and Fee Bank. We're in the Fidium Fiber, or former Consolidated Communications building, right? So they gave, the space was free for a while, and now it's at a severely discounted rate. Now, one thing I should mention is the capital in these funds. Fund 1 came down from the SBA into VITA. So VITA is our partner in that fund. And that's what allows it to be evergreen. We don't have LPs. We're not answering to people necessarily who want their money back. So we have a longer term view than oftentimes than a traditional, Silicon Valley or New York VC organization. We can be more patient than others. Oftentimes, we do want the money back, because that way we can put it back out into the community. But we don't have carry on our team, meaning nobody's personally benefiting from these investments. This is all focused on helping Vermont and the Vermont ecosystem, grow, move forward, create jobs, all those good things. The second fund is a fund that came down from HUD out of Washington, D.C., Housing and Urban Development. And that was a recovery and resilience fund. And, the only restriction in that fund is we can't do any real estate. And so, that fund is on our balance sheet, but we do call the money down from HUD in Washington, D.C. We've had no problems with that. So far, it seems to be automated. In fact, at this point, we put in the request for the money. When we have an investment, the money shows up in the bank account. So So that's good. The Fund One, the SBA fund, that has a couple of restrictions given that it's seed. That's you can't have more than $1 million in revenue at the time, and 50% of the team's got to be in Vermont. The leadership team's got to be in Vermont. Other than that, we focus on Vermont, but the companies don't have to be necessarily headquartered here or have everybody here. Some of the companies that I just showed you, they may be headquartered out of California. Zymochem is what I'm thinking of right now, but they're standing up a team here on the product side because there were some folks that came out of seventh generation that had consumer goods product experience, and Zymochem hired them to build out a product team here. And so that's how we ended up in that investment. So given the world today with remote work and all the things that are happening, the way everything's changed over the past 8 years or so, we try to create jobs. If we can get a company that fine has some employees elsewhere, but we can get them to stand up a team here, we think that's a net and large benefit. There's another one that we've got that is actually out of Toronto, but they're standing up a technology center of excellence here. So high paying, high impact jobs working in tech, AI, digital imaging, digital twin software. So anyone should come to us. Any kind of business can get advice, but on the investing side, we like to have people come to us, come talk to us. If it's not the right investment for us, that's fine. I'll send them to Janice, or I'll send them to Melissa, who you'll hear from in a minute, or I'll send them to Fresh Tracks or Hula or whoever it may be. We're going to help them no matter what. And I think that pretty much covers it. I think the last thing that was one of the questions was, are we an impact fund? Are we an impact fund in the way that Janice is an impact fund? So focusing on, net benefits to the environment or maybe, social justice, something like that. I wouldn't say we're that type of impact fund, but on the other hand, we are an impact fund in that the whole mission, the whole point of the Vermont Center for Emerging Technologies is to make an impact on the state of Vermont. So we're sector agnostic, technology agnostic, but we're trying to create jobs. We're trying to help entrepreneurs be successful, generate wealth for those who otherwise maybe couldn't generate that wealth. So in that sense, I would say we're an impact fund trying to make economic impact in the state of Vermont. And I will leave it there.
Excellent. Thank you, Jeff. You are an impact fund. And folks, I've known Jeff for a long time. Back when he was with Delta Climb, that's his energy background. And I was very happy a couple of years ago to see him on the VCET roster. So nice job, Jeff, and thank you. Now we're going to move on to an even older friend of mine. If you know me well enough, my previous career to UVM was in broadcasting. I worked at Vermont Public Television for a long time. And one day along came this lovely lady named Meg Smith, and she did a lot of on-air work for us, and we've been friends ever since. So she's transitioned into a new venture, the Red Clover Venture Partners. And Meg, let's see if you can share your screen and let's see what you got.
Okay. Hi, everybody. Nice to see all of you. Some I've met, some I've not. The sharing the screen part is going to be, are you all seeing it?
Not yet.
Yes?
Not yet.
Okay. Molly, can you help me? Because I don't want to mess around with this, but did you get that link?
Can you guys see it now?
We are good to go. Take it away, Meg. Trust
All right,
us.
hang
You can
on.
see your slides and just say change, and Molly will change it for you.
Yeah, okay. Now I just have to get back to you all. Okay, here we go. So, sorry, just 1 minute. I'm got my technical issues here.
All right, we're good. We're doing fine for time.
Good. Okay, great. Thank you. Okay, so Red Clover Venture Partners, you can go to the next slide, is a new venture fund started by myself and Nikki Kent. We are launching an early stage $10 million fund to back female founders and women-owned businesses in the U.S. We are not Vermont only. We have a very soft spot for Vermont and New England, but we have a pipeline that is national. I spent most of my career in the last 20 years in the nonprofit sector. I was the director of the Vermont Women's Fund, which is the largest philanthropic organization in the state dedicated to women and girls. And it's a grant-making organization. So I spent a lot of time and energy wanting to help women's economic status with grants to nonprofits that support that mission. And I can talk about that a little bit more later, but conversely, I met Nikki Kent, who has, and you can go to the next slide, has spent her career in the private sector. She worked for the private equity. She was with My Web Grocer when it exploded, and went through that experience, really learned a lot. Then she was hired as she was the #2 hire at Mamaba and became the chief revenue officer there and helped build over 8 years that company into $30 million profitable company. Learned a lot through that experience. And when she was done with that, that's when we met. And she's been consulting with a lot of the female founders that she met along the way through her work at Mamaba. And I can just say, when you think about Mamaba, I know you all know Mamaba, but what was fascinating about that was that it was a category creator. There was no one had ever paid attention to women who needed to breastfeed and needed to live a life and work and do all the things that women do on a daily basis. And Mamaba created a product to serve those women that had never been served before. And as a result of that, she met so many different founders in different related industries: femtech, the family technology, the care economy. So that it was a whole sector. It's a very large sector, burgeoning sector, and that is part of why we have a very robust pipeline already. Next slide. Our mission: to empower and elevate women entrepreneurs. We want to not only give them funding, but resources and mentorship to drive their innovation and growth. You can see our vision. We're looking for a more entrepreneurial, more equal opportunity landscape for entrepreneurs, for women entrepreneurs. You could go into the next slide. And one of the most astounding things is when you look at what's happening currently with venture capital, that middle 2% number says it all. Only 2% of VC dollars go to women founders. Women are underfunded. You see 17% are decision makers are at funds are women, only 17%. And women have been underestimated as leaders. 10% are CEOs in the Fortune 500. But that 2% is, thank you. That 2% just represents a huge, huge gap in VC dollars. And we think that that's an area we should be filling. So why invest in women? Women outperform in revenue generation 2.5%. Women leaders are 25% more likely to achieve above average profitability. And as you see, these are McKinsey statistics. We didn't make them up. And 10% create average IRR for impact investing firms. Next slide. Okay, and this is the thing that jazzes me, and that which is why I feel Red Clover we're in the right place at the right time, which is the massive transfer of wealth that is happening now from what was the silent generation to baby boomers. Baby boomers is the largest population bubble that we have in the US. And the amount of money that is transferring from that is reaching baby boomers now and will be going to the next generations, millennials, Gen Z, is enormous. And it's actually 34 trillion is a very conservative estimation, but 70% of that wealth transfer is going to women. Why? Because women inherit twice. They outlive their parents, and I'm sorry, gentlemen, but women outlive men an average of 6 to 7 years. So they outlive their spouses. I'm seeing it in my own life. I am seeing it around me and with colleagues, friends, that women are inheriting a lot of money and they don't have the financial background, or they've never been spoken to about their finances directly. And they are either reticent or interested but don't know where to turn. So I want to say this slide, Stephanie Miller-Taylor is one of our first investors. I don't know if you all know her, but as you would if you know the Bobby and Holly Miller buildings around UVM, et cetera. This is their daughter running the company. Her feeling about investing was that it's her one act of resistance in a world where she feels that she's zero control. And she knows by her own work and her own life and lived experience, women entrepreneurs are very savvy, and she wants to be able to put her money towards that. Okay, next slide. I think I'm nearing the end. I cut this short because I didn't want to overload. These are some of our partners, as well as some of the folks we're working with. We have a partnership with Hula. Halogen is one of the larger women-focused funds in the United States, and Nikki has worked closely with them. They have an operators group that she's been a part of and helping to mentor some of their investments or businesses. The Decile Group, they do the back end of our fund. They are a platform that it's a business dedicated to help venture capitalists and to democratize venture so that it's more accessible and less expensive than it can be. Decile has a very robust platform and a lot of experience, and we're working with them. We pay them for their services, but it's much cheaper than having to have separate lawyers and doing the compliance, et cetera. It's working out to be very, very, very successful. Again, I talked about the FamTech, that's one industry. And then Brown Brothers and Harriman out of New York and Boston have the Center for Women and Wealth. We're working with them. We have a partnership with them now. And we see that as a great opportunity to build our fund. I think that's the last slide. There's a lot more to cover, but I'll tell you now that we are we're just at 2.35 million in our $10 million raise. We just started in October. In fact, the end of October, and we've had an incredible response to our mission. And in fact, all of our LPs to date are women. And so this transfer of wealth and this idea of talking to women about what's important to them and what to do with their money really, really resonates. We have a pipeline now, as I said, of businesses across the country, of founders who, there's some really, really exciting developments in women's health. And for all the women on this screen, you know that many aspects of women's health has been completely overlooked. And so that there's a whole new burgeoning industry of women who are applying their smarts and know-how to develop products to help women. Okay, what have I not mentioned? Does anybody have any questions, or do we wait to the end for that, Dan?
If there's any questions, now's fine.
Okay. I know I
Hands
sort of
coming up.
scratched the surface.
Well, it's very exciting, Meg. Really
Thank you.
happy to
I'm
hear
loving
what's
it.
going on. Very good. All right. Well, I don't see any questions or hands up, so we will move on. Melissa, you go ahead and get ready to, or go ahead and share your screen. Our
Okay.
next presenter is Melissa Merkel from the Green Mountain Accelerator Fund Center on Rural Innovation. Melissa, thanks for joining us, and take it away.
Okay, guys. All right, hold on 1 second. I'm sorry. Where did my thing go? Okay. All right, we'll just do this through in here. Okay. Let me know.
Perfect. Yep. You're good to go. Take it away.
Okay. All right. Good to see everyone on here today. Happy to see so many friendly faces as always. We have a lot of friends here. So for anyone that hasn't met me yet, my name is Melissa. I'm the Center on Rural Innovation. And on behalf of Corey, as we call it, I manage the Green Mountain Accelerator Fund. So I'll do a super brief intro to Corey and what we do as a nonprofit. We're headquartered in Heartland, Vermont. So we're a Vermont-based organization with a focus on supporting rural tech economies. So we work in over 40 communities around the country. Having started in the state of Vermont, we have a sweet spot for our lovely state. And so we work with 5 communities here as well. We have a national fund that invests in more like seed, late seed, Series A investments. And then I manage a Vermont focus fund. So just a little bit about kind of our theory of change and how we work. We believe that to try and meet the economic gap that was created sort of post 2008 recession, there really needs to be an increase in tech economy jobs around the country and in rural areas. And so we have a theory of change built around how we would like to scale that and bring that to areas like, you know, our rural counties in Vermont. So I'm not going to get too deep into our model of impact. We have this little chart that we use often. But basically, how Corey functions, we will come in, we'll do an assessment of a community that is looking to scale tech jobs in their area. So we have a team within our organization that comes in and looks for certain foundational elements. It's explained here on the side. You know, partnerships, access to schools, physical infrastructure like broadband, you know, buy-in from local politicians. And then also we believe there's a real importance for co-working spaces and places where founders can come together to innovate. And then we as an organization bring in different pieces to support tech training. These days we're focusing quite a bit on AI upskilling. And then part of what I do, and which is very fun, is the capital piece. So we bring in capital to early stage companies where often, and we'll see this in Vermont, people are building really exciting things, but it's hard to get that bit of money when you may be pre-revenue or just working on your MVP and don't really have a proven model quite yet. So that is where the Accelerator Fund comes in. So a little bit about what we do. Oh, and Jeff, I would just like to say your phrase, which I had not heard before, bought or buried, feels very, very accurate to kind of how we function as well. So the Accelerator Fund is a $3 million evergreen VC fund. It is powered by SSBCI dollars and administered to us through VITA, Vermont Economic Development Authority. So a bit what we invest in, as I said, it's early stage businesses. So pre-seed, we like to see an MVP hopefully built and being activated or close to. And so we can bring in a smaller amount of capital to get the product off the ground. And, you know, primarily we are an impact focused fund. And for us in particular, we like to see job creation as a way to, you know, enhance economic strength in an area. Of course, that becomes a bit tricky when we think about, you know, remote jobs and dispersed teams. And yet we still see there is you know, we do see a nexus of activity in the companies that we invest in here. Okay, so a bit about what we look to invest in. We like to see companies that have, especially if they're sort of early in their testing phase, that have gone through one of the accelerator programs here in the state. You know, there's quite a few. Startup Rutland is wonderful. Brick out of Springfield. Launch VT, of course, has been around for quite some time. There's something getting started in Randolph, and if there's, I may be missing some, so and anyone jump in, but I'm sure you all sort of know the programs that are available. Our check size averages from 50 to 100K. These days, we seem to be landing more on the $100 side of, or $100,000 side of that. We look for companies that have their headquarters in Vermont, and the majority of the staff are based here, which I think is similar to what Jeff said. And also because we can't lead around, and that is sort of rules based on SSBCI dollars, we need a one-to-one match for our investment. It's typically where our founders here are kind of running into headwinds at this point. So I'll just share a little bit. I wanted to get a slide together with some nice logos. I like Jeff's slide with the actual technology shown, but I ran out of time. So to date, we've invested $625K. Chittenden, and I see Rustum is on here. So hey, Rustum, as our most recent investment, and we closed that just a few weeks ago. Chittenden, which is a care services pairing platform. We're really excited about this company, and Rustum recently relocated to Vermont from Canada and had scaled the company there successfully. So he's growing it here now in the US and getting it started in Vermont. VShip, which is a vehicle shipping platform. You may recognize Ahmed and Amr. They won Launch VT last year and have just been doing an incredible job, especially in terms of bringing AI into the company and how they're creating efficiencies with that. Veride Technologies, which everyone has talked about, and also Aprexis and Brightwater Tools. Aprexis sits in the healthcare space, and Brightwater Tools is more climate. They do water processing and organic fertilizer. And kind of one of the interesting things that we're seeing now with the fund, we have an additional 500K that's already been earmarked for companies here, where we have term sheets out, but our companies are struggling to close their match for our fund. So that is a challenge. I mean, some of these term sheets have been out now for quite a few months, but it's something that we see in the state. It's hard to get early capital in, and we have at least 3 more companies now in due diligence. So we're seeing a lot of really exciting opportunities out there. It's just a matter of getting that early capital in to move dollars out the door for us and into founders' bank accounts where they need them. So I'll tell you a little bit about the Green Mountain Launchpad, and it is sort of a service that we manage in addition to the fund, and kind of also, again, sorry, keep quoting Jeff, but similar to what Jeff said, this is like essentially pro bono support. So we offer strategic support and advice to any founder. It doesn't have to be a tech company. Just anyone who's scaling a business here in the state, we will meet with them, we will talk with them, we will ideate, we can go through business plans. This is all pro bono and just a service that we offer. We also have mentorship opportunities. So if there are specific issues that founders are running into, you can contact us and we can pair you with someone. We're trying to build a program in Vermont. We have quite a few people signed up, but also we have just a team of national mentors that will gladly take a call and work with any founder here who is working through some issues. And then also we can pair people with pro bono legal and financial services up to a certain amount of hours. And so that is available to anyone who's interested. And so you can reach out. Okay, and that is my contact. So I'll stop sharing, but happy to also talk a little bit about this kind of what we're seeing on the ground. As I said, angel investment kind of continues to be the biggest challenge to our founders. But also one of the strengths of running a fund here is our partnerships and how closely we work with a lot of people that are on the call today. So, we really appreciate opportunities as they come through. If they're not a fit for a certain fund, we're always happy to take a look and just see how we can support, even if we can invest. And being very early stage, we're usually able to come in when others cannot. So we're always happy for recommendations. And also, we're just trying to kind of further ingrain ourselves in the ecosystem. I think Vermont obviously functions very much on community. It's one of our strengths. And so wherever we can plug in and support, we are happy to do so and work as a team. And I just genuinely appreciate also all the sort of support we've received over, I've been here now, I guess, about a year and a half. But I am in the Burlington area frequently for meeting with companies. Oh, and one thing I should note, we invest in organizations all around the state, but we cannot invest in Chittenden County because that is kind of where the nexus of activity is. And I mean, one could very easily make the case that Chittenden is also rural, but we try and get the funds out to other areas where there may be a little less capital deployed. But we've like, for example, Jeff let us know when Veride had kind of relocated to Waterbury, and so that opportunity then was on the table for us as an investment. So those kinds of heads up are extremely helpful for us. And honestly, it's having done fundraising for most of my career, it's really nice to be in a role where I have money to give out. And so we're just very eager when there are opportunities available. Please send them our way, because we're always kind of digging around, and I'm out traveling the state looking for founders in need of some support. So please think of us when you find somebody.
Thank you, Melissa. And please, all presenters, put your info in the chat so we can track you down later. And Melissa, I concur. It's way more fun giving money away than it is trying to raise it. Raising money is the hardest thing.
I agree.
Yeah. We have a couple other friends that I'm going to offer a minute to. Chris Dautel from Schurz Communications. Chris manages the two funds that came out of the Schurz purchase of Burlington Telecom years ago. And one of them, Chris, why don't you tell us a little bit about the $50K a year that we give away in grants, and then another $250 that we have in investments. And I will tell you that there are, let's see, Jan, Lee, me, Louisa are all on the Schurz Investment Advisory Committee. Chris, what's going on?
Hey, how are you doing today? Yeah, we have a number of folks on our committee on this call today, so that's great. Thank you. So yeah, we just our latest investment of the Burlington Telecom Innovation Fund was the Vermont nut-free chocolates, and we're actually looking at them for a follow-on as they continue to hold that round open. We're right on track for our $250,000 a year investment per year in the area, and we're going into our 6th year. So the fund's been doing great. I can't thank the committee enough. The committee has been fantastic. I'm due for a trip up there, and I'll be making a trip up there this spring. So
excellent. Looking forward to it. Yeah, thank you. We also have some new friends on the call today, David and Lila from the Hula Community Partners Fund. Floor is yours for a minute. Tell us what's going on.
Thanks, Dan, and it's great to be here and see everyone. Yeah, 2 quick plugs from the Hula side. The Hula Community Partners Fund is a new fund that was formed at the end of 2025, and we're hoping to start investments this quarter. It is another partnership with the Vermont Economic Development Authority, and is a $10 million early stage investment fund that's focused on increasing the access to capital for founders in Vermont. And our goal is to bring Hula's ecosystem, this ecosystem on the call, to the founders, and just help support their access to capital, the challenges with raising capital in Vermont, as well as bring supports to them as they deal with the challenges in growing businesses here. So we're incredibly excited to kick that off. It's in close partnership with UVM. UVM is supporting an intern for the fund. Lila, if you're able to say hello quickly, that would be great.
Absolutely. Yeah. Hi, guys. I'm a senior at UVM. I have a finance concentration. Eric Monson is my professor, actually, for my entrepreneurship capstone. Jeff Robertson came to speak to my integrated product development class. That was fascinating. Yeah, I'm super excited to be working with the Hula Community Partners Fund. I'm going to be supporting due diligence once we start getting into more conversations with potential startups. And yeah, this was fascinating. Meg, I especially was super interested in what you were saying. I've never really thought about the, like, I don't know, the fact that more and more women are inheriting wealth, but they don't know what to do with it. It's something that I've certainly, like, all the boys in my classes have been investing in the stock market for years. I have been too, but every woman I talk to, even in the finance concentration, is like, I don't know what I'm doing. That's really scary. So I think that's incredible. I would love to talk to you more about that sometime. Thank you, guys. This is awesome.
Thank you. David, you all set?
Yeah, just 2 more quick things for happenings at Hula itself. We have the Biolabs Innovation Showcase on 2/27 in partnership with UVM and Biolabs. That's from 1 to 6. There'll be a pitch night or reverse pitch night and some networking opportunities. It should be a pretty awesome event. So if you can make it, there's a link through our events page to get access to that. And then on February 17th, we have Vermont Professionals of Color coming in to do story sessions. Tino is going to just talk about his story and starting up that organization. Again, just another opportunity to come together and network a little bit.
Excellent. Thank you very much. And we have one final investor I'd like to give a minute to, Lee Bouillet, my old friend. Lee and I served on both the Burlington City Arts Board and the Generator Board. And Lee is a longtime principal in Fresh Tracks. How's it going, Lee?
Great. We have a $19 million fund that we're investing out of. It's a vintage 2023 fund. We've made 14 investments so far. We have 2 early exits out of that fund as well. So both Data Blend, which is based in Stowe, and Sports Innovation Lab, which is based in Manchester, Vermont, recently had exits. So nice to complete those and start to return capital back to investors. But our goal is to find another 6 or so companies to fill out this fund on a target of 20 companies in the portfolio over time. So I feel like we're on a pretty good investment pace, and it's great to see all the investment activity. I can tell you when I started in 2005, this call would not have happened. It would have been basically VCET and Fresh Tracks. So it's awesome to see everybody here.
Totally agree. Thank you very much. We have a couple minutes left. Nora Devlin, are you still on the call?
Yeah, hi.
Please introduce yourself and tell us a little bit about what's going on with Launch VT.
Yeah, absolutely. Hello, everyone. For those of you I haven't met, I have been lucky enough to meet a few of you. My name is Nora Devlin. As of last Wednesday, I'm the new director of Launch VT, so still kind of figuring out which way is up, but very excited to be working with all of you. Right now, I'm going to shamelessly plug that if all goes well, applications for Launch VT are going up on Tuesday. I would so appreciate any of you sharing that with your networks. We want to get a robust cohort going in this year, and those applications will close on March 18th. So very much excited to get those out. I've been copying down a lot of your emails. And I'm going to start reaching out to a bunch of you about different ways that we can work together. Jesse, I see your hand up. Is that for me or is that for Dan?
Finish up. It's after you.
Okay. I think that's it. Very excited to meet all of you. Expect to hear from me.
Excellent. Welcome to the entrepreneurship community. Jesse, and if anyone else, we have a couple minutes for shameless self-promotion. Jesse Stein from UVM, go ahead, and otherwise put your hand up and we'll give you a minute.
Yeah, so I wanted to dovetail off of the applications for Launch VT. Startup Rutland has also opened up their applications for their G Alpha. And so Nora, something for you to know, if you have a startup that is not quite ready, they're at a stage 0, stage 1, they have a concept, but not really anything fleshed out yet. That's what the G Alpha program is for. And so if you get some not quite ready applications, you might want to force them towards Mose Casaro from Startup Rutland, who launches G Beta and G Alpha. G Alpha is open now. And reach out to Mose. I can put his contact in the chat if anybody has any concerns there. And then UVM Innovations, the day job. We have our startup school and innovation improvs, and we have one coming up on February 27th, which we are bringing in representation from the U.S. Patent Office and resources from the library here, which is a patent resource center. And so if you want to find out more about IP protection and patenting and talk to representatives from the Patent Office, we'll throw some information in the chat about that event as well.
Excellent. Thanks, Jesse. I see 2 people have their hand up. I'm just going to say it's 10 o'clock. If you have to jump, please go, but I'm going to stick around for a few more minutes. And Eric Monson, UVM entrepreneurship professor, what's going on?
Okay, real quickly. Thursday, April 23rd, UVM business pitch competition. I have 2 asks. One, I'm looking for judges. I know Jesse's been a great judge in the past. I'm not sure if he's available this year. I'd love to have Nora back. I mean, Nora as a judge now that she's in charge of Launch VT. In addition to judges, I'm also looking for financial sponsors. I'm looking for smaller gifts, $250, $500, $1,000 to boost the prize package. So if anyone is interested in either being a judge or has the ability and interest to make a slight donation to the prize pool, please reach out to me at eric.munson@uvm.edu.
Beautiful. Megan Zimmerman, what's going on with you?
Yeah. Hi, everyone. Thanks for hosting this, Dan. I appreciate it. So I work for UVM in the co-op office as a part of the Grossman School of Business. We just launched our first cohort of students out on co-op this year. or this spring. So I was excited to see David hosting an intern, and see David host an intern, B, all of the amazing resources that are available to entrepreneurs. But if anyone's interested in potentially, needs a little bit of help with a co-op, I think working for one of the funds would be an amazing opportunity for students. So I'm happy to chat if that's something anyone feels like they can kind of take on or want more information about. I'll put my info in the chat, but thanks, guys.
Thank you. Anyone else? All right, I think we are good to go for today. I think Trisha put the content for the next e-forum in the chat. I saw it flash by real quick. I'm not sure, but it'll be about a month from now. And you'll see the agenda, etc. A reminder that the e-forum listserv is there for you to use. I really like to see folks understanding that you can, events and jobs and whatever you might have going on. So please use that. It's an outgrowth of this face-to-face meeting, and you're welcome to use it. So thanks, everyone, and we'll see you in about a month. Take care.
Thanks, Dan.
Thanks, everybody.
Thank you.